And that sound means we are now live here on our YouTube channel. It's our daily show we put out there from Tackle Trading. It's the halftime report where we go through the markets one step at a time. We look at the charts, the companies, any economic data, commodities, have some fun analyzing different setups or trade ideas, and try to bring some value out there to you guys as our community. Hashtag Team Tackle right in the chat as soon as you come in. Let's have a fun, vibrant, and lively show as you guys always bring. I love watching those chat threads as we go through the show. Let's keep that up here today as well. And if you're a brand new, subscriber to our community coming on in, make sure you do click that subscribe button. If you're watching the show for the very first time, we do it live every day whenever the markets are live, 12:30 p.m. Eastern Standard Time. Let's rock and roll here. We got Coach Emily here joining us on Tuesday, as she has been for a couple months now, I think, starting to become a tradition here. We love having the Queen here from the Women in Trading blog, a coach over at Tackle Trading. Excuse me. Emily, how are you doing this morning?
I am doing great. The sun is out. The snow is melted. We can see grass again. It is a wonderful day in Washington, D.C. I cannot complain.
You found your happy place?
I have found my happy place.
I
I'm
gotcha.
so happy.
Yeah, positivity, my friend. I love that. Get that sun coming out. Spring is in the air, coming up here pretty quick. I'm starting to feel the weather change a little bit here in Salt Lake too. Matt, how are you doing today, sir?
Tim, I'm doing absolutely fantastic. I'm excited to hang out with the Queen, Em.
Yes.
Can't wait to see your what do we call that? Class with cash or
yeah, class with cash.
Yeah,
it's not what Marx is. Let's just put it that way. It's the opposite of what Marx is.
Mark is out there digging through the underbelly of the market, finding his.
Dude, somebody has to listen. It's easy to make fun of just because it's the underbelly, and that's just a funny name, right? The underbelly, but somebody has to.
Somebody has to.
MACQ is a paint company that created clean surface technology.
Kenny G is amazing, is what Kenny G is.
Kenny G is a paint company.
That's my YouTube coming up on my other screen.
That's right. Kenny G is reminding Emily to watch Tackle Trading's YouTube channel. That's amazing. Heard here first. Tim, I'm doing amazing. Like truly, I'm right in the middle of, say, Zoom's earnings numbers, which were absolutely amazing. Like absolutely amazing. I'm not doing as good as that. I'm not. But if you'll take a look, I'm at FGEN.
FGEN.
Yeah, just FGEN.
Mm-hmm. Ooh.
I'm not doing as bad as that. So I'm right there in the zone of a stock that had growth of 368% last quarter, year over year, and a stock that gapped down 30%. I'm right there somewhere in the middle of those areas.
So you're flat for the day.
I'm a doji. I'm a doji. I don't momentum one way or the other. I'm a doji.
Which is a lot better than FGN here. Obviously, catastrophic gap.
Actually, Ty Justice, our nephew, is helping do some stuff at Tackle, and I was actually just teaching Ty today about what a gap is, and I was talking to him about the 5 different types of gaps, and FGN was just a gap candidate here. So I was in the middle of those ranges. Yep.
The thing about it is, I don't know anything about this company specifically, but I've seen more huge, massive movements in the last couple of weeks than you did over the last year. Mm-hmm. It's a reminder that earnings matters. So
well, and yes, you're absolutely right, Mark. But take a look at Lemonade here today, LMND.
LMND. Mm-hmm. You have to remember that I'm running screens, otherwise I'm just going to be on my own zone. I'm looking at the chat. You have to
I'm enjoying this. I'm enjoying every second of this right now. But you take a look at Lemonade here today. Lemonade down. The chart doesn't reflect a percent, but Lemonade's down a good 14% here today. And you know what? They did nothing but a beat and a beat. But Tim, what have we been talking about with price performance on earnings expectations?
Well, I mean, you have to smash it when you've had that kind of run up into earnings. I mean, even this is a company that's fairly new to the market, obviously. So if you don't beat and raise guidance and give some positive commentary, you might take it on the chin.
Again, they did beat. They did a beat and a beat. But when you're talking about a stock that in the quarter is up, even with the drive down in price just over the last month and a half, even with that, the stock's still up double in the quarter.
Yeah.
You got to do better than beat by 5 cents, and you got to do better than just slightly beat on revenue numbers. It's just expectation is high. They beat, but they didn't beat the expectation, in my opinion.
Yeah.
I think we're having a return to reality, and I talked about this a little bit in the commodities report this last weekend. Don't be surprised to see good old-fashioned classic downtrends happen on stocks. We really haven't had that over the last year. I think downtrends are something. I mean, because that's normal trading, right? That's something we've seen for 15 years. It was weird that there weren't downtrends on individual stocks over the last year. I think that.
You know what was kind of weird? It was actually looking for bearish candidates.
Mm-hmm.
Like that was a weird feeling this past week of actually trying to hunt bearish candidates. That hasn't been the case in months and months and months. So yeah, things are getting back to normal, I think, with the market. And like I said, throughout the entire earnings season, you had such a massive run up in price that the fundamental analysis is catching up to the price, in my opinion. And yes, I mean, this has been the theme throughout earnings season. Beat and a beat. Market reaction has not been as anticipated.
Mm-hmm.
Fits the entire theme that's been happening with Lemonade.
Yeah, and I do want to get all you guys' full take, Matt, you specifically on like the Target and Zoom earnings today. There was a couple of real big ones. We'll do that a little bit later in the show. But let's start with the top of the market actually here for a bit. And Mark, return to normalcy a little bit here. We got a doji. We're up here in the range. Beautiful bounce off the 50-period moving average yesterday. What a wonderful day for the markets in that regard. Coming in today, and there's not carry through, but there's not selling either. Mark, I'm going to start with you. What's your read on price action?
I mean, it's a little sloppy, but not unexpected, right? Like, I mean, it was some pressure this morning. It's rebound, stabilized a little bit. I mean, that was a massive run up yesterday. I mean, I think I read somewhere that it was the biggest up day since June or something like that. I mean, that's a big day up. It's not surprising all this going to take a little bit of pause right now. I mean, when you look at this, the question I was looking at this morning for my own personal, I woke up this morning and I'm like, are we going to trade in a range, right? Are we going to trade in a range for a little bit? And that was the question on my mind. I mean, we'll know the answer to that in the coming weeks. But we got a resistance level. We bounced off the 50. When you look at tech has a pretty clear horizontal support level. It feels rangy to me. Obviously, breakouts to highs could start a new trend, but got to wait till you see it. But if we do trade in a range, that can be what can be an excellent stock pickers market. During this last 18 weeks, because we're in 18 weeks since the election, it's been a nice run. It's been a nice stretch. No complaints at all. Been a nice stretch. But during those times where the broad market's taken 2 weeks off, 2.5 weeks off, those were excellent stock picker market environments. No downward pressure heavy to rattle the overall markets. No upward pressure where just everything goes up. But those markets have been very good for cash flow and very good for finding those directional trades on select setups.
Mm-hmm. Matt, what's your take on price action here?
Well, Mark mentions that it feels like we're kind of moving into some stagnation, some consolidation, some degree of neutrality. Correct, Mark?
Yeah, that's what was the question on my mind when I woke up this morning.
Well, and definitely with support holding and specifically in the entire marketplace yesterday, it does have that feeling to it, but there's a reason for that. Number one, let's take a look at all these indexes very quickly. In the S&P 500, you are not range bound yet. You still have pivot confirmation that is higher, so you still have a higher high. You still have a higher low. But what you also have is slowing momentum. And so you do have a little bit of slowing momentum, which is a indicator that the market could certainly go into some degree of neutrality or consolidation, or however you want to say, just a simple neutral condition, right? And you also have supporting evidence that is happening in the other indexes that is that's behaving a little quicker than the S&P is. If you look at the kind of the leadership in the marketplace since the Biden election in November, you're looking at the Russell 2000. And the Russell 2000 was in a very consistent bullish uptrend, riding the lightning of that 9 EMA. Obviously, that momentum has shifted, and so you're now looking at the Russell 2000 in a little bit of a consolidation, short term, just short term, nothing long term, nothing to be concerned about. It's not like, oh man, we're going to have this amazing covered call environment for the next 6 months. No, just something short term, trying to figure out if it can maintain its strength at these elevated price levels. And so you do have some degree of neutrality because you had a high base. The high base fell, it came back down into the moving averages, and now you're consolidating over the last 3 weeks. That really does, the technical kind of trigger you wait for in that environment is the breakout in the Russell 2000. No doubt about that. You wait for the Russell to break out. And Mark, I do agree. Even in consolidation, there are great trades out there. This is a stock picker's market. There's great trades. But when you expect that next leg up and you want to open up those risk graphs and you want to push those chips into the middle of the table, that's when the market supports the action. And so when you're looking at the market like this, you're saying, yeah, love the bounce yesterday. That gave us a little bit of reprieve. Now we're looking at this as a breakout in the Russell 2000 because of the consolidation. If it was not for the consolidation, if it wasn't for the failed high base, you would be looking at yesterday as go, 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 go time. But because of that action that preceded the volatility of last week, you do have a little bit of a different technical read here. So in the S&P, you still have pivot to pivot, higher highs, higher lows, but you have slowing momentum. In the Russell 2000, you have not only had that shift of momentum, you now have some degree of consolidation. In the other two indexes, looking at the NASDAQ here very quickly, not only do you have short-term consolidation, but you have some degree of neutrality here in the NASDAQ. And even though neutrality and consolidation, they're part of the same lingo group, right? To me, neutrality is pivot confirmation. You have a double bottom scenario here. You have potential head and shoulder formations happening. These are prolonged consolidation patterns. And so with the double bottom in the NASDAQ here, you have the confirmation of that neutrality now in the NASDAQ. And so, yes, that filling of the S&P, that shifting of momentum is happening because we are starting to see some of these indexes separate themselves. And then when you look at the, obviously, when you look at the fourth major index here, the Dow Jones there, you still are looking at the Dow Jones very similar to what you're looking at, to what you were looking at it before the failed breakout of last week. And before that, you were looking at a potential breakout pattern over some prolonged consolidation, and now you're living in, you're waking up to that potential breakout again. And so with the bounce yesterday, and that's what I said yesterday when I was, or that's what I was kind of talking about when I said, I don't think people understand how important that bounce was yesterday, because what that bounce did is it kept certain technical patterns alive. And without that bounce, you would not have had that. And so you're kind of coming back a little bit to where we were in the Dow Jones, specifically hovering against that breakout channel. And we're looking at that same breakout channel here at that 31,600 level. And so it maintained, the bounce maintained what was happening in the major market indexes. You do have some separation happening right now, but there is a lot of evidence to suggest that in the S&P 500, we are certainly slowing down from a technical perspective. That is supported by the other indexes out there. And so, yeah, I do think you're not in the NASDAQ, it's neutral, but in the Dow, you're waiting for that breakout again. In the S&P, you're waiting for that breakout, and not the breakout, but your stock pickers market in the S&P, because you're slowing momentum. The concern is building a little bit. But yeah, I would say, Mark, the feeling of consolidation is supported by the technical evidence.
Mm-hmm. Emily, what about you? Let's get you in here on this one. I mean, obviously, the technical read here, as Matt and Mark have been talking about it, we've got a little hesitation candle. We need breakouts on some indexes, waiting on some of this stuff to play itself out. But really, really healthy candle yesterday. Are you approaching this in a delta version, Emily? Are you still theta trading? Like, what's your take on market conditions right now?
Still theta trading for the most part, and like Matt said, that hold at the 50-day on the S&P, really was crucial, right? So it's just a matter of now being patient, go through your different sectors, find whatever trades and setups you can find within the sectors, and continue trading as usual. But it's good that we held the 50, because if we had broken the 50, that would be a completely different discussion this week, right? So having that big, I wish yesterday's candle wasn't as big as it was. I wish we would just had, nice little doji and just have this nice uptrend all week. But, we had this big uptick yesterday. So today you expect a little bit of slowing momentum, which is not a big deal. But yeah, you just continue trading as usual. I'm still looking at cash flow trades and adding into positions this week if they're there. But yeah, it's just business as usual.
Absolutely.
Yeah, and that's kind of my read as well. And after, I mean, yesterday was the best day since June, guys. I mean, it started, the bounce was pretty solid in the morning, and it kept building throughout the day. It just kept building. So it was a really, really, really good day in the stock market yesterday. And it's not unusual, guys, after a really big day to have a hesitation candle. It's not abnormal to go, if you go out there and you run a mile, to take a little bit of a break. The market ran a mile yesterday. It's taken a little bit of a break, especially on a day where somebody tell me any important stock related market news today.
Well, Emily said the snow melted in Virginia.
Okay, which at least I can have a natural gas take on that. So I there's just not a lot of major market news here today, right? We're going through the process of reconciliation with the $1.9 trillion stimulus still. There's just, outside of that, there's nothing out there today. There's no major economic reports to really kind of talk about. We don't have a lot of central bank actions. That's coming next week. And so it's just one of those moments where we don't have a lot to talk about. And after a massive update like that, I think a nice little hesitation isn't necessarily a bad thing.
I love days like this. I have no problem with a day like this. Let the party kind of simmer down a little bit. Let's reassess technical patterns. Let's do some management, write some covered calls against positions. I mean, it's a day where a trader can kind of just manage their account, work through it one step at a time, just like the way we're always supposed to.
I mean, these days are really easy for a cash flow trader. I mean, they just, it's like you sit back and you look where you're at and you're like, all right, free day.
Yeah,
mechanics.
Move on to
the next day.
Let's move through.
But yeah, and the cash flow traders, like I love cash flow traders, but let's face it, guys, any environment is typically fairly decent for a
There haven't been
It's not
too many
crazy.
bad ones in the last year, right?
Yeah, like you guys have been a little spoiled recently.
Oh, we've been spoiled rotten.
Some gap downs might wake you guys up a little bit to your 10 delta.
Quiet down.
Okay, you guys have had a wonderful run. But the Delta dogs out there are still alive and well, guys. There's still really good trades out there to be had. I mean, I as I always do, and I know we're going to go through, a couple of M's favorite candidates later on today from a Delta perspective. But, I was going through the scouting reports this morning, both the stock and the options report, and let's take a couple, just a peek at a couple of them. KKR, please. Solid bullish retracement, riding the recovery in that blue random generated line Emily has that should be red. We need to fix this. This is intolerable. This is just not okay.
This is what you get when I share my screen. Okay, live with it.
Listen, I get that you're trolling me right now so that I will share the screen next week. But I am just as stubborn as you, young lady. So here in KKR, you gotta like the relative strength over the course of the last week. It hasn't violated its pattern. Yesterday didn't get blown up, and you got a pretty tight and easy trigger above the intraday highs. And so that's still alive and well right there. Let's take a look at SU. You know, a little Suncor energy play. Who doesn't like a riding the lightning 9 EMA bounce off a flag pattern, kissing off support at $20 with a hammer today, by the way. Like that one's not that hard there. I know the market can be a little bit difficult sometimes. Take a look at TEL. TEL broke out of a prolonged consolidation, little bit of a random crazy cup and handle, but it did it. Broke out yesterday, maintained the strength, snapped back today, and recovered the high from yesterday. That to me seems like bulls kind of control that stock right now. You take a look at the options report, FCX, a darling of old tackle trading. FCX in the bull channel after a failed high base, I'll give that, but in the channel of a rising 20. I don't like your lines. This is not okay. But in the channel of the bull zone between the momentum of the 9 and the standard of the 20. Confirmation literally today on FCX. You know, and we're going to talk a little bit about some of M's ones as well, but you know, that's what a stock picker's market is, guys. It's the market's down, but you still have stocks in great trends that are still performing the way they should.
Mm-hmm. Yeah, there's good setups out there, you know, and I love that process, Matt, going through the reports on a Tuesday, getting ready for the day, because there's always going to be setups developing throughout the week.
Isn't that the process everybody does every day? They look at the market, then they look at the sectors, then they look at their watch list. Like,
absolutely.
If you want a simple
everybody
life,
does every day.
Try to remind everybody out there.
Like, isn't that what everybody does? Yes,
I'm not
it's
sure.
what everybody should do if you want a simple life.
I
mean, if you enjoy
literally, how many billions of people are there on this planet?
I don't know.
Is it 8?
You did pretty good.
Are we 8 yet?
Can we have a tiebreaker from our game yesterday on the podcast?
7.7. I'm going there. 7.7. Are you going to beat me? Under?
Yes. Mark's now looking it up.
I had a really dark joke that I can't tell on that one.
Nope. Yeah.
I can't tell that one. Okay. Under it is. That's how many people should be doing that process.
Absolutely. Good setups out there across the board. And I do like what's happening around metals. Freeport-McMoRan, obviously very healthy, but XME I saw doing pretty well. And some of the metals.
I don't like everything that is happening around metals.
Not gold, but those miners. And those,
the miners looking pretty decent.
Miners are looking pretty good. Mm-hmm. Speaking of commodities, let's flash through
metals.
Metals, exactly. There's not a lot going on in commodities today, Mark. So I'm going to have you kind of give me some analysis as we go through this pretty quick here. Look at crude oil, little doji, $60. Let's start here. Riding the lightning, guys. Still looking pretty healthy. Nice little candle, Marky.
That's a pretty clean bounce off the 20, isn't it?
Mm-hmm.
I mean, when you have a preferred area in the market, and we've talked about energy a lot in recent weeks. When you have a preferred area in the market, it's not surprising to see real clean bounces off of moving averages. It shows that there's automatic algo buying at those levels. Nice little pullback. Wouldn't be surprised to see crude oil consolidated a little bit. There is a wild card this week in oil, though. OPEC is meeting, and whenever OPEC meets, especially in transitionary stages where the policy isn't completely outlined, you already have Russia doing what Russia does, saying, "Hey, we've reached equilibrium. Let's pump more." I don't know who wants to pump or print more, Jay Powell at the Fed or Russia with oil, but Russia will push them. If they can come to some kind of reasonable agreement, everybody expects production to go up out of the meeting. Mm-hmm. That's already a given. It's just, can there be any fireworks? Is it going to be a smooth meeting? So that's a wild card this week with oil. You get beyond that and you get a reasonable production deal out of OPEC plus, you're going to see some consolidation and eventually a breakout in oil, I think.
Mm-hmm. Matt, is there a very subtle momentum change in that chart?
I haven't been very subtle about my analysis, saying very specifically the momentum has shifted
a little bit
completely, and the volatility has shifted, and that shouldn't be surprising as oil got elevated. And the analysis for me starts at that, whether you call that a high base in the middle of the channel. I've said this a few creative ways. Let me be very specific. I'm not a buyer, and I don't at these elevated levels. I think the volatility is a signal that says the price performance is starting to slow down. And I truly believe the trade is the catch up on energy catching up to oil instead of oil continuing to lead here. And so I do believe the play is energy. And I will say this, I also believe that Vladimir Putin is the greatest energy trader in the world.
Yep. And
he is typically a seller between 65 and 70 historically.
He's had an incredible track record. There's no question about that. Gold then here next. Let's take a peek. A little doji at
By the way,
bottom.
that doesn't mean I think it's going down.
No. Just the momentum shift.
I think the momentum is shifting.
Yeah. And we could see some consolidation up there. Gold here down at the bottom, trying to just, find some support down here. One green candle on the bottom is not support yet. Anybody, Matt, any quick analysis on gold? I think we've been hitting this one pretty well.
Gold, it's simply because an asset class goes up doesn't mean it found support.
Nope, didn't find support yet. The dollar is
kind of in no man's land right now with gold.
Same thing with the dollar, kind of hitting its head in the middle of a range there. Not much on that front. And then Bitcoin, little doji at 50K. Guess it's holding, kind of holding with the market. Obviously did have the nice bounce there yesterday, but still not developed or triggered in something new yet.
And Goldman has restarted their cryptocurrency trading desk.
Really?
They did.
Good for you, Goldman. Like you ever really shut it down. Come on.
Interesting. Hey, Matt, next time you ask me to drive, you won't ask me again. Tim, you want to analyze the VIX for us?
Listen, some people.
Oh, one last note on Bitcoin. I had Fidelity issued a statement and says they see Bitcoin working as digital gold.
Emily, everybody finds art in something.
That's like a
heck, that looks like one of my biotech penny stocks.
The VIX
hey, listen, I told you everybody finds art in something.
I mean, I don't know.
Mark found it and compared it to the underbelly in a matter of
always.
2 days.
It is. That looks like
I'm just saying,
fails.
We're looking at the VIX. Just throwing it out there.
Moving on. Let's get into stock talk. Probably the most interesting news here today is around
that journey to the VIX, Phil, there, Em.
Not what I was expecting.
No, never is. Never is.
I was trying to trigger you and I got Mark excited. It does not work.
No.
No. Moving on. Let's do earnings roundup here, guys. Moving to stock talk. By the way, we do this each and every day, same kind of process. We work through the big picture news, not a lot going on today. Then we get into individual company news, then some picks at the end of the show. I know Emily's got a couple of setups we're going to digest and kind of look through later. We'll also do upgrade, downgrade. If you've not done it yet, give me a thumbs up. Let's get those numbers up. Maddie, earnings.
Upgrade, downgrade. We definitely want to upgrade Tackle Trading's YouTube channel on that one.
That's exactly right. Thumbs up.
Yeah,
thumbs up.
we are a value company. We've found our value. What company would we be?
We'll let Team Tackle answer that one. That's a good question. That's a good question.
Diamond in the rough. Penny stock that's going to go to the moon. We're that. We're that. Reddit, we're GameStop. Just throwing it out there.
Ashford Hospitality Trust.
We're whatever you need. We're a chameleon. That's what we are. Let's go. Let's go with that. Let's come back to Lemonade very quickly. LMND already talked about kind of the performance on their gap. This is a little bit of a concerning gap here, obviously violating some technical support levels. The concern should be to the downside here. But Lemonade did officially beat. The expectation was a negative 65 cents. They did come in at a negative 60 cents. Obviously, against the price performance over the quarter, not very good. And guys, sometimes it's important to understand how much company these revenues have. They came in at about 20.5. The expectation was 19.3. And so again, for a company that literally went up 100% in the quarter, having revenue growth, or having your revenue come in right at the expectation, still losing right near the expectation, just not good enough on the raw numbers. So officially a beat and a beat, but again, not a very good beat and a beat. They did also warn, they're an insurance company, they warned about the storm that came through America and how insurance claims, and specifically in Texas, how that might impact their bottom line as well. And I do think a little bit of that headwind from an insurance claim perspective is probably have more to do with the price performance today than their raw numbers do. And so that headwind was the concern here on Lemonade. The technical concern is obviously we're violating support in a high flyer type stock that can move. You know, we were talking about gold moving 15% in a tremendous downtrend over the course of the last 6 months. This can move 15% in a day and a half. That's how quick it can be. So obviously there is some concern, some headwinds, and the concern is justified in my opinion. Looking at the next one, and obviously the one I wanted to start with though was Zoom. Zoom was if there's a stock that represents 2020, it would be Zoom. Zoom would be the stock that represents 2020. And you know, they last quarter, if you'll remember, guys, they had a really good quarter last quarter as well. They had above 350% year-over-year revenue growth, and the stock went down. And we're like, wow, can you believe it went down on those types of numbers? Again, how much was Zoom up in the quarter? It had an amazing quarter. And the same thing could be said here about Zoom. You know, Zoom's raw numbers are extremely impressive, extremely impressive. But we're still talking about a stock that, quite frankly, is doing $882 million, and it trades like it's a $1 trillion market cap company. And so we're still talking about this stock's price being very, very elevated against where it was supposed to be. And a lot of that is due to how much just free marketing Zoom had last year to a large extent. Zoom's raw numbers, 122 against the expectation of 79 cents, 882 million versus the 809 million. Revenue exploded year over year again for Zoom. This is like another day in the park for Zoom. 368% increase in growth year over year. Listen, you can't say more positive things about the underlying raw numbers of Zoom here today. A really good beat on EPS numbers, a decent beat on revenue numbers, and an astonishingly good 368% year over year increase in revenue growth. Any company that would get that in any year would celebrate that. But again, you're still talking about a company that if they were here 10 years from now without the pandemic, you would have said that's a great success story. Zoom's a tough beast to analyze from a fundamental perspective because it is so overvalued.
Yeah, I mean, it's extremely overvalued in that regard, and the price appreciation last year is what's put it into these such extreme elevated levels.
I love the report, though. Yeah, I love the report.
They smashed it. They also raised guidance like you talked about. They're still going to have an incredible year this year based on their projections and growth, but you can't grow the way you did last year. You can't.
Well,
I mean, that's not sustainable, obviously.
No, and honestly, a year of consolidation is not necessarily a bad thing, but I'm not sure you're going to get that. I'm not saying that's going to happen, not at all. I'm just giving a hypothetical. Let those fundamentals catch up, right? Give more time for Zoom, for the rest of the world to enjoy what we enjoy with Zoom. But you got to be interested in this type of company, I think. I know it's overvalued. I know it's a high flyer, but I kind of feel like Zoom is Google in 07.
They've planted their brand as a moat in this regard. People
and they weren't in first position, but the pandemic kind of put them in first position. And so I just think you gotta be looking at it.
I'm more interested in Zoom long-term analysis than short-term analysis.
And that's what I'm talking about.
Yeah,
it's just so stinking overvalued right at this point for any new investor.
Well, and then even that candle right there in the short term kind of blows up this whole pattern in some regards. I mean, it gapped out. It looked like it wanted to push resistance. Last night, it was up 18% just on the numbers alone. We have the cash open. We have a no buy day straight back down into the range. This kind of leaves it in the middle of no man's land in the short term.
Well,
From
technically, yeah, there's no trade here on Zoom.
Yeah.
I mean, we're talking more about the company, the fundamentals, and why the price performance is the way it is today, given the fact that, I mean, if I guarantee if this is '06 and I'm a new trader and I'm looking at Zoom's earnings and I'm saying, how in the world can a company go up 368% year over year in revenue and go down on the day? Like, how is that remotely possible? That would confuse me. My analytical mind, that would confuse me. But again, given the backdrop of what this company did in the last year, it's a tough fundamental nut to crack right now.
Yeah. Mark, any thoughts on Zoom?
Listen,
This isn't your
you
kind
guys
of stock,
really
so.
just kind of nailed it. Like you just kind of nailed it. I mean, it's
When
just,
you hear PE ratios this high, does that just give you anxiety? Does that just make you like, I'm not interested because
oh,
the
no, I mean, no,
valuation's just
anyone
extreme?
knows me knows I don't
Yeah.
chase stuff like that. Like, and I miss out on some really good growth opportunities. I remember I just missed selling Zoom naked puts at $80. So I miss those days. So.
Well, I'm not sure you're going to get that day again, and that's why I like Zoom. But it's just, like I said, it's a great company. You got to love their raw numbers. If you're an investor in it, you're in celebration mode, and you could care less about price because it's like, yeah, this is what I signed up for.
This is what
No, a company like Zoom, let's say you own it and you have that long-term belief, totally understandable, right? I mean, really the only question you ever have is, do I try to sell some really out of the money calls against shares I own?
No, the answer is no.
And so, like, I mean,
only if you want to have a nightmare of a life.
You know, so it's just, it's Zoom. I mean, I just don't personally like stocks that can't cash flow on some level, but Zoom's treated people very well.
Yeah, but Zoom isn't entering into the, hey, listen, I'm ready to retire and just do covered call stage of its life. It's not ready. It's ready to take on the world. Let it. I don't think Zoom's a covered call candidate.
And if you're a true believer, nothing from this report got you off of that true belief in your long-term vision.
No. Hold on. Wait a second. Whoa.
We're the opposite.
Are you kidding me? You say a true believer on stuff that has no intrinsic value and no fundamentals behind it and is all just faith-based nonsense. That's where you bring in the word belief. This is a company that just destroyed expectation on EPS and just went up revenue 368%. That's not a belief. Those are raw numbers. You can accept that as the truth or not, but those are raw numbers. You want to talk about belief? Let's pull up Bitcoin and you can lay out all belief.
No,
that report reaffirmed belief. You know,
you've been hanging in too much fiat, brother.
What do you see in Target? There's no belief you need in Target. Target's an incredible retailer. By the way,
talk about EV versus IV here.
Not.
There's a soapbox in your life coming.
Oh, all right. Target earnings.
Target. Let's move on to Target here. Target raw numbers 267 versus the 253. Revenue also went up 28.3 billion versus the expectation of 27.5 billion. Revenue did come in 21% increase year over year. Did talk about a little bit of headwinds coming here on Target, same type of supply stuff we've seen from other companies, but this is a little bit of an aggressive response given the raw numbers, quite frankly, a little bit more than what was seen in the market recently.
Yeah, I'm more surprised by this one selling the way it is, even than say Zoom, because Zoom's just, got the volatility in the short term, that kind of stuff. But Target, Matt, they had an incredible quarter themselves, right? I mean,
they didn't really have a bad quarter.
Yeah.
No, and they even same store sales exceeded the expectation, Tim. So EPS numbers exceed. Let's go percent here. EPS numbers just barely exceed. It was a beat though, but it just barely did. Revenue numbers slightly beat by about 700 million on revenue. So slight beat there. They did. Oh, I was going to do a lemonade joke, but they did a slight beat there, 700 million. And same store sales came in at about 20% versus the 16% expectation. These are not bad numbers out of Target, not at all. But it does fit a little bit of theme coming out of retail. This out of discretionary this earnings season.
And
beats and sells.
It's up 81% in the last year as well. This might be one of those scenarios where we've been seeing that for a while.
Maybe, but it's also in the quarter. It's kind of just faded. I mean, a little bit up, nothing aggressively though. Over the last, from the first of the year on, it's up just a couple percent. So I get it, but to me, this is not a Zoom type thing where it's up a quadrillion % over the course of the last year. Yeah, Target had a great year last year, but it's something else is going on. I got to dive into it a little bit more because that candle's wicked crazy.
Yeah, I agree.
That candle does not reflect what the earnings numbers were.
Well, and if you really look at the intraday, by the way, it all started happening after the open. So all of the digestion.
Same thing in Zoom too, by the way.
Sell off.
I mean, look, Zoom is going to gap up what? 14%?
Yeah, something like that.
Right, something like that. And all of a sudden, cash open, boom, gets slaughtered on the cash open. Volatile cash open here today on some of these names that had a little bit more eyes on them.
Okay.
And then the last one I have is SE, Singapore gaming giant. C Limited here. C comes out, reports a worse than expected loss. They came in 87 cents, a negative 87 cents versus the expectation of 57 cents. And that the expectation was a negative 57 cents as well. Revenue did come in slightly south of expectation at 1.6 versus 1.7. That represented revenue growth of 101.6% year over year. The only thing I'll say is Zoom's report was much better. Similar price response though. Gap up, sell off from the cash open.
It's hard to match the growth that Zoom has. Obviously,
of course, the company that missed expectations is up on the.
Is the one that's up. I know it's ridiculous.
Well, that's been kind of a trend this earnings season, right?
This earnings season's been weird.
It's been a weird earnings season. Matt, Chico Foss had earnings this morning.
We're not talking about Chico.
Did you catch that one?
I saw Chico on the list. I didn't give it much thought outside.
You recognized it. Listen, but baby steps,
okay,
brother. Baby
hold on.
steps.
But I need to be clear on this. The only reason I recognized it because I knew you would laugh at something about it. That is the only reason I recognized it. It had nothing to do with the company. And everything to do with your little smile right now that I don't like.
That's funny. A couple of the corporate items. So that's it for earnings, right, bro?
Honestly, see good revenue growth year over year explosion here, but their raw numbers weren't that good. This to me would be a sell. And honestly, Zoom to me is a buy. Those numbers are amazing, and I know it's volatile, but those numbers are truly, truly amazing. But those numbers are buying numbers is what I'm talking about.
I mean, like sometimes you have earnings that smash expectations, right? Like I remember tech like 3 quarters ago when you're like, wow, Zoom smashed expectations.
Zoom destroyed it. They had a great earnings report. I don't think C justified the thinner air up here. That's just my opinion, but I think out of all these earnings reports here today, C had the worst one.
Yeah.
And it's the one that's up. Welcome to the stock market 2021.
Stock market 2021. All right, a couple other quick corporate items. Then we've got upgrade, downgrade. Do you want to do upgrade, downgrade?
But I also don't think you should take much from that since a lot of this got caught up in the cash open.
Yeah, on both Target and
Zoom. On both Target and Zoom.
I agree.
Well, and on C too, but.
You guys want to do upgrade, downgrade before Emily's picks or after, by the way?
Let's do upgrade, downgrade, and then we'll finish on M's picks.
Sounds good. Quick one news item outside of upgrade, downgrade, actually maybe 2. Roku real quick. Yesterday, they announced that they are going to be going into a partnership and buying the Nielsen Ratings video advertising business, trying to monetize all those users that they've been picking up through advertising through Nielsen. And it seems like a very smart strategic alliance to see if they can actually execute that. Interesting move out of the company. Couple other quick ones as well before upgrade, downgrade. Let's take a look at one more. Square, SQ. Here's the kind of thing a fintech company should be doing. They are announcing that they're going to open operations for their in-house banking to offer financial services and loans to their users on their platform. So if you're a Square user, do a certain amount of revenue, you can qualify for other loans and all that kind of stuff. Being celebrated in the market. Nice little fintech move out of that company on Square. I think both those stories are interesting for both those companies, by the way. We'll see if they can end up turning into something from that. But let's do upgrade and downgrade. All right, let's go around the room. Let's start with the person running the screen, Emily. Actually, I'm going to give you Disney. Softball one here, Emily. Bank of America named Disney their top reopening play. Do you agree? Do you disagree?
I agree.
Matt?
Disney must, Bank of America must be secretly in the halftime report sometimes.
I was thinking the same thing.
Yeah, they must be there. Name me a stock that better reflects the cyclical movement in the market than Disney.
I mean, think about it. How many kids didn't get to go to Disney World last year? Everybody and their mom was going to be flocking.
Yeah.
Disney
You
World
think my wife will be down there? Oh yeah. But think about it. Cruise lines, they
Disney
shut down,
cruises.
right?
Yeah, but Disney.
Okay, so cruise lines got shut down, right? So yeah, cruise lines got shut down. Disney cruises. So reopening certainly supports that, right? I mean, Mark, you fought for Carnival Cruise on Dirty Sexy Money for reopening, right? Disney has their version of Carnival Cruise. Movie theaters, right? See, the movie chains, right? They represent that, right? Disney had, if you look at Disney's previous earnings report, guys, they didn't have a major movie release in the fourth quarter of last year. And by the way, still beat the expectation. And they did not have a major theatrical release last quarter, not one. Yep. All right, so movie theaters, cruise lines, Disneyland parks. Who represents more of traditional cyclical movement than consumer spending money on Disney-related products? I think I agree with Bank of America, but let me put it like this. Bank of America agrees with
Tackle.
That's right. I'm hard pressed to find another better reopening theme play. Mark, can you think of one that you would put above Disney?
Well, listen, as far as strength, reopening plays, no. I mean, I like bottom of the chart stuff, but I love reopening plays. And if we get a reopening, which I believe we will, I'm certainly positioning myself that we are. Reopening is going to be a powerful thing. There is some stretch in the coming months, and I don't know what triggers it. I don't know when it occurs, but there's that, hey, we've just passed a certain vaccination threshold. Hey, we've just done, I don't know what that event is, but it's going to trigger a big move into reopening plays. It's going to be a big catalyst week. Disney's going to benefit.
I think, Mark, something that could help that from a tailwind perspective is once we start achieving 2 million average doses a day, especially.
Yeah, there's some event coming up, and I don't know what it is, but the market will be euphoric.
I think it's the number. I think one of it will be the number of people we start averaging in vaccines.
That's a good guess. And when that happens, hotels, airlines, cruise ships.
It's something theaters, I'm looking at. Like that's something
Disney,
I'm tracking.
And so if you want to call Disney, I mean, Disney's going to have a.
Whether it achieves that from a price performance, no, I do not believe that. Like I would pick other stocks that would go up higher than Disney would go up in a economy reopening up thing. But I also don't believe that's what Bank of America is talking about. I think what they're talking about is what company better represents the economy reopening up than Disney.
It's really hard to see Disney not up quite a bit when December 31st, 2021 rolls around.
Especially given the backdrop of that nice little technical pattern coming into a $200 significant whole number breakout.
Yeah, the breakout.
I've been even looking, at bull call spreads, something, because it just feels like it's something, and so I'm trying to figure out a way to take advantage of it.
Listen, you gotta like Disney when even Mark likes Disney because he hates.
Hey, Disney's going to fight Amazon in 2332 for Battle of the Worlds.
Who are you picking? Who's going to win?
I haven't.
You had to pick on Amazon.
My vision only carried it to that.
Dude, that mouse has superhuman powers, bro. You don't bet against the mouse.
do bet against Jeff Bezos either. That's a tough call. I think I'd take
I'm
Amazon.
betting on the mouse.
I'm taking Amazon in that fight. Let's go to the next one. Mark, I'm going to throw this one at you. Micron, MU.
Dude, the mouse has like Iron Man.
Another company I miss selling naked puts on.
Now, Mark, this is, go ahead, Bet.
Oh, no,
Micron,
I'm just going to talk about how awesome just
You love Micron.
CEO.
I love CEO.
His CEO is my favorite CEO. This is a company I've talked about for years. Love the company. And I'm very happy, even though it's left how I trade. I'm very happy that it's not overvalued at these levels.
Let's see if you agree with the price target then. So they got a price target upgrade at Evercore at $135 from 105. It's a pretty big price target upgrade.
So 40% markup.
Yeah.
Okay.
Yeah. So give me a line at 135, Emily, somehow, some way. Maybe you might even need a weekly chart potentially. Mark, that represents 40% from here. Do you agree or
it's ran 80% since its liftoff in November. I mean,
listen, what's their time horizon, I suppose, because if it's 10 years, yes. If it's 5 years, yes. If it's 1 year, maybe.
I think it's probably a 1 year expectation.
Right. So I mean, you're not going to bet against Micron or semiconductors over the next 10 years. And yes, Micron will achieve that, as all those semiconductors will. That 40%, it's just a matter of how much time. In a year? Hey, Em, do me a favor. Go to the trade tab. Give me the year out expiration date. Go 381. Let's go March 2022. Okay, and what they upgrade to? 135?
135.
135. I'll take the under.
Options market pricing in about a 29 delta there. That's interesting.
Yeah. I mean, I think it gets there technically. This is a favored area of the market, no doubt. And Micron's kind of a darling in that area right now. So, and it just broke out, so we can certainly get there. But there's a lot of hills and valleys in that year. So I don't know. If it's a year, I would say no. If it's 2, I'd say yes. So it just depends.
Next one here. I'm going to give this one to Matt, actually. Give me the Dow Chemical, DOW.
Oh, give me Dow, huh?
I know that you love materials and chemicals in general have been strong. And one thing that you always do is you take a look at other stocks within industries and sectors. So this is one I think that is right up your alley, Matt. Do you agree or disagree? Upgrade Dow Chemical to overweight their sector relative to equal weight. Is it one of the better chemical companies?
It is one of the better chemical companies, and you got to like the breakout that Dow Chem is looking at right now with that potential breakout of 64, and that would be a momentum trigger above 64, which means it would catch some momentum and ride the wave a little bit. That would definitely put it in a preferred technical category against its counterparts. There's no doubt about that. But Dow Chem, in my opinion, is a little bit stronger than the rest of their industry in general. Now, I would put a couple other stocks up there with Dow Chem, though. Like Dow Chem would be overweight for me against its industry. It would, no doubt. But I would put Eastman up there, EMN. Take a quick look at EMN. I'd put that up there into that same type of favored status. MTX threatening a $75 breakout there as well, out of a little bit of a consolidation pattern, a little bit of a high base. So you got breakouts in Dow, you got breakouts in Eastman, you got breakouts in MTX here. But I'd put Dow up there in preferred status, absolutely, against its counterparts. I like Eastman. I like the technical breakout in MTX a little bit better, but yeah, that breakout's legit.
Yeah, I think so. I think based on just relative overweighting, maybe not calling it the best company in the sector, but I do agree that it is.
I like tiers, right? I mean, I just do. I like tier 1, tier 2, and I'd put Eastman and Dow like in that tier 1 category in this industry. Now, obviously, the sector would be a little bit different, but I'd put them both in that tiers. And Tim, you might like one better. I might like one better, right? They're in the tier for a reason. So.
All right, next one here. Let's go back to Emily, and then we'll go to Mark next. Got a couple dialed up. Trip Advisors, TRIP. Again, another economy type reopening play. We got an upgrade from Citigroup to a buy from neutral after incredible price appreciation over the last couple of months. Emily, do you agree? Is Trip still a buy for you?
I would agree with the buy on Trip. I mean, it's the theme that we've been talking about, that reopening theme. So what are people going to do? They're going to travel. They're going to go stay at hotels. They're going to go, on vacations and do all kinds of stuff. So yeah, I would see this as a buy from a hold. I would definitely be in and look at that breakout that we just had a couple of days ago, continuing momentum to the upside. So yeah, I'm a buy on this one.
If you're going to trade this, it's probably still bar by bar at this point. I think a buy rating in general is also willing to consider future setups as they develop. Matt, you agree on Trip? Buy?
I do technically, yeah, not fundamentally, no. I don't. TripAdvisors, it will be supported by the economy reopening up, but it needs to make a hell of a ton of money. It needs to stack cash here because it is a debt-driven company that is not supported by fundamentals. It has a negative PE ratio right now. The price to book is 7.5, and it doesn't have a PEG ratio because it has no guidance and it has no growth. And so, yeah, I do think the economy reopening, it certainly supports it from a technical perspective. And so I do like that $50 breakout from the attempt yesterday. You got to love the snapback breakout here today. Yeah, it can be traded bar by bar with the stop loss under 50, in my opinion. But technically, yes, I would upgrade, but not fundamentally, no.
Man, it's benefiting from the theme, right? This whole theme.
Absolutely.
And when a theme is powerful, it's going to take everything with it in the short term. But you probably, if you're going to trade this, wait for a good setup. Don't chase the dragon.
Last 3 months, we're talking about a company that's up damn near 170%.
Yeah, it's had a huge run.
Yeah, it's going to be overvalued for a while.
Two more quick ones here. Mark, I'll give you one that I know these are companies you track a lot. Carnival, Royal Caribbean, or Norwegian, doesn't matter. CCL, let's go with one of them. They all got an upgrade over at McGuire.
CCL, it's got a good trigger. I like it.
Absolutely, a great trigger. Mark, outperformed from neutral.
Had a decent little sexy, this is on our dirty, sexy money list. It's had a decent year so far, like a lot of those stocks on that list. That list is doing pretty good so far this year, Matt.
It's not going to beat last year, but...
Hey, listen, it's having a good start. Listen, once again, when you have a theme that's powerful, I mean, why do I like some of those dirty little stocks I do? Why did I bring up Trivago? Not because Trivago is a great company. It's just there's this theme going on. There's this theme going on about the reopening, and there's some juice. It's why I like Jets. As long as this theme is powerful, and it's a good one, right? It's a good one. There's upward price appreciations, especially when you get good technical setups. So for the theme, now Carnival will just issue 100 billion shares again at some point, like they've been doing.
Yeah, and it had a one-day bounce.
If you think Carnival's business is cruise ships, no, it's issuing shares.
No, it's selling shares. They don't sell cruise lines.
They don't do cruises anymore. Yeah. They sell
Why
shares.
would they do that? Just sell shares. That's all you got to do these days. Just sell shares.
But,
step one, get a corporation. Step two, sell shares. Step three, retire rich.
People buy, and, it's like...
That's what we do. Mark, how about that trigger against 28? Do you like it as a buy above 28?
Yeah, listen, I like it. I like naked puts down below as a conservative play. I like
Let's talk naked puts real quick. Where you thinking here?
I haven't done one on.
Can we start the auction at 20?
Well, let's go out to April because listen, I'm in the sweet spot on April options because I'm 45 days out, right? And I just love the 40 to 49 day time period, those 40s. Go back to the chart because I want to listen, naked put 101. When I'm in a conservative mood, every once in a while I'll be more aggressive. I want to sell back into the range. Now, the last range was pretty sloppy, but it ranged from about 18 to about 23. $20 is right there in the middle of that range. Yeah. I go out to April. I think I saw $50, put me back in the range. So if I get market volatility, this and that, it could slide.
You got 8 McRibs there.
No, I mean, I've done on reopening plays for the last year. Could I have made a lot more money on this and that? Sure. But the naked put strategy of selling back into ranges, whether it's airlines or cruise ships or whatever it is, man, it's been a good year for that.
So,
and it's really conservative and it doesn't cause you any stress.
You got an 11 Delta 20 contract getting 49 cents. You don't need to do the ROI. It's going to be a fantastic, sexy, amazing ROI. What do you think?
$20 strike price, April.
$50 for an 11 Delta 20 strike. You're willing to take possession at 20. You're in the middle of the range.
It's a common sense naked put play with good ROI.
With a good theme. I mean, and once again,
that's a rock solid 25% return.
Yeah.
All right, fine. I'll do it.
Okay. Got him. For everybody else, I like to break out of 28.
Yeah, the upside's got potential as well. You could play this Delta or Theta here.
Wow.
That's a good naked put though, Chucky.
I had to tie up a whole $290 worth of margin on that one for April. I don't,
$50.
Are you going to live?
Hey, on my penny stocks, I got to tie up that much margin on a $3 stock. So
because they're pricing risk to zero.
Mark
Tell you something.
Finally, Mark is finally waking up to what he's been doing. He had that one moment. He's like, wait a second. I've had to be putting up that much margin on a 30-cent stock. Yeah, it's priced to zero, bro.
Once again, I've done this on Carnival probably 20 times in the last year. Obviously, it's treated me well. Yeah. And I'm willing to take ownership, right? I'm willing to take ownership. This is not a trade. If it comes back in the range, I buy the shares.
I can tell you guys right now, I did the DSM list over the holiday. Tim, you were right there with me the entire time, and there was not a stock Mark fought more for than CCJ was up there. But
I liked the uranium and I liked CCL, and I wanted an airline
up there, but maybe it's just the CCs, CCL, CCJ.
I wanted an airline. I wanted a CCL. Because I just saw, down at the bottom, if the theme got going, these things could have big years.
Yeah,
percentage-wise.
Things had a really good year so far, and I like the trigger. I think this is a great candidate because for the Delta dogs out there, they're looking at that 28 north of 28 trigger, and they're saying, let's rock and roll. It's had a week of consolidation. The 90 EMA has gotten up to it. It doesn't have a clean trigger at 28 on the intraday, but it's got a decent enough for the cash flow trader out there. They're like, yeah, give me eight McRibs at 20. I'm good.
Absolutely.
25%. Think about it, guys. Raw numbers: 25% return on 11 Delta. On probability, that's 89% probability of cash flowing 25% over the next 45 days.
Keep going. I'll sell two and just get really wild.
Well, hold on. Let me talk him off the ledge there. I'll talk about probability of touch and how you're going to make bad management decisions.
Oh, I don't make bad management. You know why?
Okay.
You know why I don't make bad management decisions?
You're Mark Justice?
Because I got diamond hands.
Diamond hand. Wait a second. Hold on. Okay, so I finally get it. Diamond hands means you don't have to make any management decisions.
Exactly. Oh, yeah.
Oh, I got it.
No, you just be like, goes zero, but I got diamond hands.
Life is simple. Either you lose everything or you get everything.
Yes, you're getting it now. I don't got no weak hands when it comes to CCL. I got me some diamond hands.
What does coal miner hands mean? Because that's what I have.
Coal mining hands.
Gonna stick.
I got Grandpa George Justice's coal miner hands. What does that mean?
That means you're actually going to work your trade, I guess. You're going to get
I'm going to work the system. Okay,
right.
all right.
That's right.
Okay.
Gritty, I like it. One last one quickly, and then Emily, I know you got a
I got charcoal hands.
Interesting. Beyond Meat. Beyond Meat. We're going to start with
downgrade. Agreed.
Emily. Upgraded to a buy from neutral at Citigroup. They love the new contracts. They love all the positioning they've been taking recently with McDonald's, some of the other things. They believe in the future. Upgrade to a buy. Emily, agree or disagree?
I don't trade Beyond Meat, so I really don't have any analysis on it, but I would not buy at these levels here. For me, I wouldn't, at least.
This is absolutely one of those it's about the future moment, right? And in their recent earnings report that we covered here at Tackle Trading, we talked about their contracts they signed with Yum. We talked about the contract they signed with McDonald's to be the, I want to say the face of the McPlant, right? The face or the taste of the McPlant, however you want to go about it. But we talked about that here, and I do think that is a very good deal for Beyond Meat, a very good deal for Beyond Meat, especially the McDonald's one, right? That's signing a lister type material there. So really nicely done for Beyond Meat, and I certainly can expect a little bit of a fundamental bounce over time on that one. But you're also starting with a company that has a 0 PE ratio. It's got no PEG ratio because it has no guidance, no growth. And you're talking about a forward PE ratio that if they get it right, it's still rocking 332. So even if they get it 100% right, you're still talking about one of the more overvalued companies in the stock market. So I do think that it could catch a wave of buyers' enthusiasm in the market, certainly, given the fact that it did just sign these types of deals and it can catch some momentum. But fundamentally, I honestly, guys, I wouldn't call this a fundamental value unless it was like a $12 stock. And so there's nothing fundamental here in any capacity. But could it catch some momentum off the McDonald's, signing? Yeah, it could. So I'm not going to disagree with the, I believe they upgraded on the McDonald's, right? I'm not going to disagree with that, but fundamentally we're still talking about a very overvalued company.
Yeah, obviously you got to be excited about the contracts that they're going into and the moves they're making if you're a Beyond Meat investor, but it is all about the future, and this is one of those true believer moments, I believe.
Well, and hey, young traders out there who want to, get rich quick. Well, the 3 people that got rich quick on Beyond Meat, they priced in a performance for the next 20 years. So this is what happens. You have very prolonged periods of garbage fundamentals. So
love it. Love the analysis during upgrade, downgrade. That segment we are done with. We're going to now move into our last segment here. And I believe, Emily, what are we calling this, Emily? Is this class that makes cash? Are we sticking with that? Is it,
it is
class for cash?
Class.
I don't know. I can't remember who was. I put it in the chat last week. We were about to end the show, and they said that, and we kind of took that and flew with it. But I don't know what we're going to call it. But it's,
can we just call it?
All the most creative people are in the chat and not the ones talking right now.
Exactly.
Can we just call it not Mark's trash?
Yeah.
Not Mark's trash.
Look at that. Up.
Not Mark. What finger was that?
My pointer finger.
Well played. That's fast. That was fast. That was fast.
Oh, wow.
All right, Emily, what you got, my friend?
All right. Before we go to my picks, I have to do one of our coaches a solid here. Marquise and I always chat back and forth via text, and he literally just sent me this text. So I'm going to read it out to you guys, and you guys tell me what you think. He goes, yo, check out Allie. I'm indecisive if I want to be directional or cash flow. It's breaking out, which makes me want to go aggressive, especially with the price.
Tell that young man to go streaking through the quad, maybe take it through Best Buy and have a great Saturday and the Sunday. Let's party here. This is a breakout out of consolidation. This is unleash.
Hold on. Now you have to talk to Marquise, because I'm just going to tell him, listen to the halftime report at minute.
Talking to Marquise right now. He knows it. Let me call him. Hold on.
No, I'm a cash flow trader, and I would go directional here. And it's not even really
sexy.
But this is the struggle that us cash flow traders usually have, is like, when do we go cash flow, when do we go aggressive and go directional, right? And we bounce back and forth with each other like this, and he wants to go aggressive.
Yeah,
especially with the prices,
Yeah, I mean, you got to go directional here.
I think so too.
I'm not certain you have to go directional, but I do see a directional play there.
Okay. If you were to chase the dragon here, Tim, this would definitely be Danny's dragon off Game of Thrones. It's a directional play.
Okay.
It's top pick, bro.
Danny's dragon.
It's Danny's dragon.
That's a callback.
All right. So
Danny's dragon.
We
So
still
how do we
doing
play
Game of
this?
Thrones references?
No, I thought I wanted to see if I could get Mark again in such a short time frame, but it didn't work.
Marquis hunting for advice from the Queen. I like it.
Listen, there's a time to go. Listen, any environment can be a cash flow environment. Can we all agree with that?
Correct.
Yes.
Okay, except massive volatility to the downside.
Correct.
You're not offsetting that. You're just not. You'll get hammered in that. But there's not every time to be a directional trader, correct?
Correct.
Okay. This is one of those times where you need to pick up the big britches and be a directional trader because you just had 2.5 weeks of great consolidation with a great trigger. And yes, anything can happen in the world, but this is a trigger you take. And when you see it the next 1,000 times, you take it the next 1,000 times, and you're going to hit probably about 550 of them. You take it every time. It's like clockwork. You don't even think about it.
Just like clockwork. Just
What's
do
Nike's
it.
motto?
Just do it.
That's what you do.
Just do it.
Just do it. All right. Well, there you have it, Marquise.
Michael
Watch the
Jordan
halftime
would
report.
take this trade. Actually,
let's see if we can return the
Cuban
favor.
would take this trade.
Cuban knows how to trade.
Cuban would take this trade.
Yeah, he knows how
Ally
to trade.
Financial, are you kidding me? On a
Yeah.
breakout, Cuban would take that trade.
He knows how to trade.
Cuban's a fantastic trader.
Uh-huh.
Let's see if we can return the favor
like
from
it.
Marquis.
I like
Emily.
it.
Yeah.
I like it too. Thank you, Marquise, for that one. So I was going through my daily routine, just like we talked about earlier in the show, and I was going through the stock report and the options report, trying to find some setups there. And there's some really good ones that I have yet triggered, but I want to talk about these two, one from the stock report and one from the options report. So from the stock report, we have Eli Lilly. And looking at Eli Lilly, I'm thinking, all right, we can do a couple of things here with the stock. Now, if it's on the stock report, obviously you can trade the stock, you can trade the equity, you can also, do the option if it's got liquid options there. But with Eli Lilly, I'll probably be looking at a cash flow trade where just finished earnings, so we've got quite a bit of time before earnings here. This nice little breakout here. If you want to play that, you can wait for the breakout here at 218. But as an aggressive trader, if it's cash flow, I would look for a cash flow trade here from the stock report, or just play the equity, whichever one you like. That's one that I had here for the stock report. We also had some other ones on the stock report.
Let's take a look at Lilly real quick, though. Tim, are you going to name this pattern?
It is the king's bed pattern, but
God.
I mean,
did you come up with that?
I did.
He did.
I like it. I like the king's bed
it's
name.
It's growing on me.
I like it. I think it's catchy.
But it better be a bullish pattern, so Eli better work out here, or we're all going to remember it being nasty.
So basically, the king's
double
bed
bottom
is the double bottom after
the double bottom, double top in a bullish uptrend. Yeah. All right. I like it.
And that's the
king's bed.
That's the headboard.
And then the trigger is obviously the breakout of the shorter resistance level, in my opinion.
When you get above the sheets, right?
Right there. When you get
get above the sheets.
You get a little hot, you take the sheets off, you get above. Okay. This is going downhill soon. We might not be able to do the king's bed.
Abort. This is not where I was thinking this at all.
The test is to name it in front of Gino, and let's see where it goes. And if it passes, we're good. So here, now I'm just above the sheets. I'm done.
I kind of want to jump in the sheets with Lily here, though.
Oh my goodness! No, we're done. Like I said, Gino, and Tim's like, let me do it.
Back on Lily real quick.
Oh my gosh! And Shalimar's dancing in the sheet song. I mean, the fourth line of the song is, "Hey, don't you want to hit the floor?" Like, listen, this is good stuff.
Oh Lord!
Got a floor
for this.
Why, Matt? Why did you have to bring it up? Why?
It made sense at the time. It made sense. I do regret my decision. But no, I do think that on the king's bed, because I do like the name, on the king's bed, the trigger is the break of I can't even say anymore. Like, this is ridiculous. The break of the shorter resistance level. That's the trigger. That's what it's. Yeah. Okay.
We were trying to end this show at 2 o'clock and be on time, but now this is just downhill.
Listen, we need
I'm
to trademark
going to tell a
this
history
now.
of the interest rate cycle in comparison to inflation. Mark. That's what I'm going to do.
I like the breakout here, Emily. I think it's tradable.
I like
sure.
the breakout here
Absolutely.
too, but we don't have a lot of King's bed technical setups here to kind of track through history, right?
Mm-hmm.
Like we got a billion retracements, we got a quadrillion breakouts, we got an MW head and shoulders, we got all that galore. We don't have a lot of double bottom, double top breakouts off of momentum triggers and bullish uptrends. They don't happen a lot because
I'm really
typically
curious.
the retracement works out.
I'm going to go try to find some of these patterns in historical just to see. I'm curious about this. I like the psychology of it a lot.
Mm-hmm. Mm-hmm. Okay.
Okay, can we talk about the psychology of that real quick, though?
No. No, we can't. Not necessary at all. This is good. Let's tuck this one into bed, tell it a bedtime story, and let's get a new stock.
Good night, Eli Lilly.
Good night, Lily.
We'll see you at 2:18.
I wish I knew their drug.
We just got stopped out.
I wish I knew their whole drug line out because they have a sleep medication somewhere in there.
Oh,
you could tie in here
goodness
to a joke.
Guys, was there any news today?
Apologize.
Light news day.
Light news day.
Queen, you're driving.
Wow. I did get away from it and you guys made me come back. Crazy. All right, my other one that
PayPal.
I had was PayPal.
PayPal.
This was on the options report. Nice bounce off of the cluster of the 9 and the 20, which is in blue. So I'm looking to play this also on a, on a probably a cash flow for me on PayPal. When I get to these high price stocks, I usually try to do cash flow trades on them if I can. I'll go directional. Maybe I could do a bull call, but I usually try to see whether I can pick up some credit on these, especially since we have some other great breakouts that we can do directional and go like, with Ally that we could just go straight directional. But looking at PayPal for a cash flow trade, what say y'all?
So on these types of deeper pullbacks, especially in this market where it violates the 9, violates the 20, you always get a little bit more concerned in that environment because you violated some short-term support levels and you're getting into more zone analysis, right? It's in the zone, right? You're not an assassin at that point. It's like you're in the zone, but you have really good reward to risk ratio scenarios in that situation. So for example, if you're buying right now 273 and you're targeting T1 at 309 and T2 at 340, you got a beautiful reward to risk ratio in that environment because you got a deeper pullback and you have similar targets, right? And so you're just getting in at a better price, and obviously the stop will be placed underneath the base there at the 50-day moving average. That's a very decent short-term trade. But whenever you get those deeper pullbacks, kind of coming back to the psychology a little bit, I microanalyze it to a certain extent. And I'm like, well, it violated the 9. It failed that high base. It didn't even touch the 20. And like, I just start overanalyzing. And so sometimes I feel like the best analysis is bull call versus bull put. You just, you dance that dance, bull put versus bull call. And Tim and Am, I want to ask both of you guys, because I know both of you guys like those trades, right? You're both vertical. You got one on the vertical debit side, the other one's on the vertical credit side. So the bull call being that vertical debit trade where you're still taking advantage of the directional position you have, whereas the bull put spread, vertical credit spread, you're basically lobbing a grenade saying, well, I like the technical setup, but I really like, selling a $200 bull put spread and saying it's never going to get there, right? So how do you guys go about making that decision? Because we'll put stocks like PayPal on our watch list all the time, right? All the time. And some traders will say, yeah, I'd like the bull call side. Other traders will say, I like the bull put side. Some will be like directional, everybody to each their own. But specifically about you two, how do you go about making that decision in these types of technical moments?
Tim, you want me to answer and use your
100%.
analogy that you taught me? It's the 3 C's, right? It's the cushion, the chart, and the cash flow. And you go through that process.
As your mentor, now I'm curious if you can teach that analogy, because that would let me know that you got it perfectly. So I'll leave that one for you in a second. Yeah, the 3 C's of cash flow trading for sure are some of the components, what that goes into, and Emily will expand on that. But do I get enough cushion to make me feel comfortable that the credit I'm receiving, and the chart that I'm reading it on, it all kind of line up together. Right now, this deeper retracement is developing to where you could get a nice delta move here. I look at the credits in the market. The first thing I consider, Matt, is not just PayPal alone. I don't make this decision in a vacuum. I don't think traders do that, quite frankly. I look at my portfolio, what I currently have. If I have 0 credit trades on, and let's say the debit and the credit are a 50-50 debate for me, I might lean on the credit side of it if it's a qualified trade. If I have 0 debit trades on, I might lean on the debit side of it. Let's take that out, and let's assume I've got both in play.
Let's also take away what your portfolio needs, because you're just making one trade.
Yeah, that's what I'm saying. Let's take that out, even though that might go into my thinking in general. Let's take it out for this analysis. I would then first price the credit spread, because I know I could build a reasonably good debit spread on most liquid option chains and
especially
make it
PayPal.
Yep.
Right. You can get there on PayPal.
I know the debit will work if I want to go that direction. I'm fairly confident I could build a debit spread.
Let's map out the credit spread here. So 45 days out, let's sell what do you guys think?
I would start at a minimum with that 17 delta at 240, but I would probably go a little lower and even do the 12 delta. I'd be looking in there.
Start with that one.
The 12 delta, and that's what's that, 220?
230 by 220.
230. Really, can we get 225? Can we make 225 work?
They don't got a 5 strike on that April.
They don't got a 5. I'm looking at the chart, and I don't think we can make 220 work.
Go back to the trade tab for one note there, Emily. We get $1 on 10 on the 230. On the 220,
you get $1 on 10.
On the 220, we can get basically what is that? 65 cents.
64.
They both would work. We can make 220
both would work
from a Royd perspective.
Oh, the Royd would be fine on. I mean, you're getting 64 cents against a $10 margin there, so that's not great. It's 6% on against margin. The other one's 9% against margin. So obviously you're going to get a bigger credit on the 230 by 220, but both would work on a Royd, because you're basically what we're trying to do. Everybody's, we're maximizing the range. Is it the cushion?
Yeah.
Right. I think that's the cushion part of the 3 C's, because I'm very interested in what the 3 C's are actually.
Go ahead, Emily.
I've made up so many analogies in my live teaching things. I mean, I know Tim probably just made something up on the fly.
I did it in the ballroom a bunch. Yeah. And one day I'm like, all right, guys, it's the 3 C's. It's the chart. You've got to have a qualified chart,
Right.
So grading and reading the technical analysis. Go ahead, Emily.
Okay, so the chart.
So it starts with the chart. Obviously, if you're doing a bull put spread, the chart has to be at least neutral to a bullish trend, right? You wouldn't be doing that on a chart that's going downwards. So you first look at the chart and see where the chart is, and then you start, like Tim said, you start to build out the trade and start to see how much cushion you can get, and if the cushion you're getting is enough for you to get paid. Is it worth doing the trade? And that's why we analyze both. So if we go to the Analyze tab, we ran both, and we did the 230, 220 is giving us 98 cents.
But then the discussion is 230 enough cushion?
Exactly. Is that enough cushion? So when I draw this and I draw that line on the chart, that's where my break even is. So am I comfortable with this line? Right. So you start going through that process. Okay, if I'm not comfortable with this, then do I need to go a little bit lower? Right, because if it does pull back and and go against you, then that's where you start to have your losses. So then you go back and we build the other one, and we said, all right, well, if we give ourselves a little bit more cushion, and now do that and do the 210, the 220, 210, now that pushes our break even back here at that 210 line. And now watch when I put this on the chart where it will put us. So if I put that to break even and then draw that on the chart, now the line's going to move a little bit further down. So are we more comfortable with the line being here, or are we comfortable with the line being up here? And you go through your process, you calculate your ROI, and then you make a decision.
I don't know if there's enough cushion on PayPal for these credit spreads.
It's in the middle of nowhere. This break even is in the middle of nowhere, so I'm not that okay with it.
Yeah, it's tough.
What's the short delta on the 230?
230 was 12.
12.
And the credit was 98 cents, right?
Call it
Yeah,
a buck.
Call it a buck.
Yep.
No, it's not going to work. If the 230 doesn't work, the 220 is not going to work.
Not gonna work. Yep.
The ATR is too big. You don't have the cushion. You have the chart. You have your roid's fine. You're rocking on the lower end on your roid. It's right around 60, but your ATR difference is only 2.2 against the standard, and that's just not gonna be good enough. You do not have. You got the chart. You got the credit. You do not have the cushion, and that cushion is so vitally important because you can't diamond hands credit spreads.
Nope.
No, you cannot.
Nope.
You can't diamond hands credit spreads. You have to make a decision, and so yeah, you can't do it. You don't have the cushion. You only got 2.2 on the ATR buffer against the 30-day number. It's just not good enough for that. If you were getting a 20% ROI against the 12 delta,
different conversation.
Maybe you take that because you're on the low end of the cushion at 2.2. You got to have a minimum of 2. So I think you're just not getting it. The directional trade is the better trade here, and that's why you do the bull call spread.
Well, and from a process perspective, once you can eliminate the credit as a rock star trade, let's say it doesn't come in like this one, then you instantly go to the debit. So I don't start with the debit. I start with credit analysis. Then we keep working through, and then we go to debit analysis. Yeah. Yeah,
and quite frankly, you go to debit analysis because the credit, there's a reason the credit doesn't work, right? There's a reason that doesn't work, and part of the reason that doesn't work is because the debit side is the better side of the equation.
Agreed.
All right, one more, and we're going to call it a wrap. Zillow. This was also on the options report this week. This is a nice clean trigger above 170. This would be, for me, this would be a directional play on this one here with Zillow, but this is also what I had on my watch list for this week. Breakout above 170, clean trigger upwards. Nice bull call. What say you?
This is interesting. I actually think the credit might be more in play here than it was before, to be honest. But the option spreads have some open chains in that April. It's kind of got me head scratching a little bit on the spread. I like this setup. In fact, when I was talking to Matt earlier, we brought up PayPal, both in very similar patterns, both viable from a directional perspective. The thing about Zillow, I think that's even in this little 2-candle pattern that's a little bit cleaner for today is that you've got a very clear trigger. If you zoom in tight, pretty tight there, you'll notice that 170 level, either on the intraday or the last 2 daily candles, you can find at either location, is definitely kind of creating a nice little new trigger if people missed the entry point yesterday, or if they didn't take the entry point yesterday.
I'm not even sure the entry point was yesterday.
Yeah, based on rules.
Right.
Yeah.
I don't even think the entry point was yesterday. I think yesterday was the reprieve that gave you the confirmation that support held at 50-day or the 50-day moving average. You were so tight against that potential trigger, and that 170 trigger, it lines up pretty decently on the 30-minute chart over the last 2 days, but it also lines up with some intraday analysis from last week, and it also lines up with some intraday analysis before the gap out on the positive earnings response, which once again, all of Zillow, think about Zillow. Zillow had a robust earnings response. Zillow's earnings numbers were fantastic, justified the market response, up 33% on the quarter, blew off the top, got caught up in the market volatility last week, and now that support level at the 147 level, guys, that support level is the 50-day moving average, which also coincides with the previous resistance pivot on the daily chart. That is a rock solid support level. Your intraday analysis supports a trigger above 170. I think the Zillow, if you're looking at PayPal versus Zillow, I honestly don't think it's close. They're close in terms of trend and pattern, but the trigger is a lot better on Zillow.
Yeah,
PayPal's good too, though. Like PayPal's good too.
They were close coming into the week, but the 2-day development, I think, has Zillow set up better for right now, exactly now, if you're trying to build a trade.
And again, they're both very similar. We're kind of, splitting hairs a little bit. I agree with that. I just like the trigger above 170 a little bit better than the trigger above today's high on.
I also like Friday's price action, right? Thursday's price action, the red candle, everything was getting slaughtered that day. Market was very jittery. Zillow held up well on Friday.
Yeah. Emily, some classy picks in there, young lady. I like it. 3 good ones. By the way, if you ever want to go find great setups, the option report, stock report, Tackle Trading has them each and every day. We put those out each and every week. Guys, great show, fun show. I don't know what else we can say about that. Had a lot of fun here today. Let's start breaking it down. The King's bed still has me thinking. So
good Lord.
I'm gonna let that one go. Let's start moving into final thoughts. Queen, you are driving today. Wonderful job. Appreciate you as always. Final thoughts for the team out there here on a Tuesday.
Didn't we have a podcast come out yesterday?
Sure did.
We did. We had a great conversation too. We, Tyler came on the pod. We had a great market skyline conversation, and we wanted to have a conversation on inflation, and I didn't want to go down the deep alley of all the historical arguments. I just wanted to talk about what it is, how we measure it, and then have a conversation with Tim and Mark and Tyler about just kind of what to do about it, and if things have changed at all. And I do think things have changed a little bit with how we handle inflation, because let's face reality, guys. The Fed changed the goalpost. We got to update certain traditional beliefs, and so we are seeing a little bit of the market cycle change, the very traditional market cycle that's been dominant in the market over the last 100 years. And I think it's a fascinating time. I truly do. But I enjoyed the conversation. I hope people learn a little bit about inflation and just enjoy the conversation. It was more of a conversation than it was me teaching about inflation.
It wasn't a lecture. It was a good conversation. Yeah, I enjoyed it.
It was just a conversation.
I haven't listened to it. I plan on listening to it later on this afternoon when I go out for my walk. But who won the game?
Well, we're not going to spoil.
Spoilers.
But we're just going to say it was a conversation about inflation, and Vegas didn't have a line.
It was a good game. It was close.
It was a good game.
Matt, name me 2 artists that played at Woodstock in 1968.
We're not going to do this. We talked about this last night. So last night, Tim and I were talking, Mark, after we do family game night on Mondays, where all the Justice families come together and we play some games. And after we got done last night, Tim and I are on the phone, and I'm like, yeah, that wasn't a very fair game, bro. And he's like, no, you can pinpoint the inflationary cost of whatever it is since America began. I'm like, yeah, like I did do a lot of research there. And he's like, all right, okay, let's play the game in my playing field. I said, okay. He's like, name me 2 performers at Woodstock. I'm like, you win.
Hold on. Tim can't win that because he couldn't even tell who Salt and Pepper and TLC were from a song. So he's not winning that game either.
He would win the Woodstock game. He would. It'd be like, what boy band out of the British invasion do you want to talk about right now?
No, R&B singers from the 90s, I might not win.
And when Tim first said that to me 10 years ago, I was like, what British invasion are you talking about? The war was done in 1812.
No, bro. David Bowie, the Beatles, and the Stones were the British invasion. You gotta know that.
Oh boy.
That was and by the way, that was a real conversation between Tim and myself. Yeah, the British invasion was amazing. I'm like, no, it wasn't. What are you talking about? It wasn't amazing. Like, we were on different levels.
Ziggy Stardust.
He did get me into Ziggy, though. He did get me into Ziggy. But no, it was we had a lot of fun in the game, and Mark asked us some random questions on what the cost was at certain points in time, and it came down to the wire. It did. It came down to the wire, and Tim had a 50-50 chance, and we'll let the listeners be shocked.
Well, that is my final thought. I am going to go listen to the podcast later on this afternoon. So
I love it.
Yeah, it was a fun pod. We had a good time.
Final thoughts from you, sir.
Listen, trading's amazing. However you do it, we're just happy to have you with you. Listen, hopefully you're cleaning up your portfolio. If you made sloppy mistakes like myself over the last few weeks, just be responsible, and you're going to find a lot of success. Coach's show tonight, 8:30 Eastern. We got Gino Poor and Tyler Craig on it.
Awesome.
So if you're a pro member, Gino and Tyler will be, they got good chemistry together. And if you're not a pro member, sign up for that 15-day free trial and then attend it going to the events calendar at tackletrading.com.
Love it. You getting ready for Trade Masters tomorrow, Chucky?
I am.
Do we know who's on Trade Masters?
Well, young Cody won last night.
Belt.
Cody's got to defend the belt.
Cody's got to defend the belt.
And Greg Holmes will be challenging young Cody.
So young Cody and old money.
Yep.
That'll be a fun one. That'll be a lot of fun, actually. I'm looking forward to that as always. Maddie, anything?
Who's older out of those two? What are you talking about?
Let me do my calculations here.
Let me do my calculations. According to my calculations, Greg is older than me.
Inside baseball.
40 years old.
He's an old soul. I love it.
He is an old soul. I love his methodology in the market, though. So
I do as well. As well. Kid's doing great things.
He is doing great things.
Maddie, any final thoughts from you?
Nope. You guys had amazing final thoughts. Glad to be with you guys here today.
Absolutely. Me as well, guys. A lot of fun here. If you've not done it yet, thumbs up on the show. If you enjoy it, you get value out of the content. We always do appreciate that. If you're new to the channel, subscribe, click the bell, come back and join us. We'll be live again tomorrow, and we do it every day. Markets are live, 12:30 p.m. Eastern. Coach Tyler will be here as regular on Wednesday. Until then, we're out.